Hey guys, hello and welcome. I'm Desi Arnaz, professional investor. And today is Monday, and here we are again on our Note Investing for Newbies broadcast. And I'm so happy to be here today. I see that I got my buddy Patrick is on with me already. Good to see you, Patrick. And so Patrick's also inviting somebody. Look at that. That's why I love that dude, man. He's always looking out for me. I appreciate it. So yeah, today is Monday. It's 4 o'clock, and every Monday, as you know, on 4 o'clock Pacific, I have our broadcast, and it's called Note Investing for Newbies. And what I do is I cover some of the basics of note investing. And then for those of you that want to know more, of course, I always invite you guys to get over to my website where you can learn a lot more about how note investing works, and you can ask questions over there and all that, right? That's at investbrilliantly.com. And so I want to welcome you guys to today's show. As I said, my name is Desi Arnaz, and I am a professional investor, and I help other people to also become professional investors. As we get started this morning, or this afternoon here, I want to invite you guys or encourage you guys to please like and share this with your Facebook friends. Also, tell your friends that are not on Facebook that they need to get busy, get onto Facebook so that they can learn about this valuable and it's really life-changing, I guess I want to say, investing space. And that is the mortgage note investing space. For those of you that don't know what a note is, let's just get started by saying what a mortgage note is. It's a promise to pay. It's an IOU. So like if you wanted to buy a house, you'd go to a bank, you'd borrow some money from the bank to buy the real estate. And the bank will make you sign a document called a promissory note. And it basically says, hey, I borrowed money from you guys and I owe you money and I'll pay you back over the next 30 years. I'll pay you $1,000 a month or whatever, right? For the next 30 years to pay you back. And it also says, if I don't pay you back, you can take my house. You can repo my house. And that's called a mortgage note. So that's what we're talking about today. You may not have known that you can actually buy a mortgage note. I sure didn't know it. And I had been in the business for 3 decades before I actually found out. I was 60 years old when I found out about mortgage notes and that I could invest in them. So, I certainly can't fault anyone else who didn't know, because during that 30 years that I was out there, I was a full-time real estate agent and I owned 2 different mortgage companies. But yet I'd never invested in a mortgage note, and I didn't even understand just how that could happen. Okay? So again, guys, do me a favor, share and like this broadcast. I would really appreciate it. Okay. Today, I'm going to be talking about how to get started as a note investor. The first things that you need to do to get started as a note investor. And so I have a little bit of a presentation I'm going to share with you guys today, kind of walks you through my thought process. This is not any details, but just the thought process that I have on what you should do if you want to get started as a note investor. Right? So let me share with you what I'm thinking here. If you've never heard of it, it's the Pareto Principle, also known as the 80-20 rule, basically says that 80% of the results that you're going to get in most things that you do in life will come from 20% of the input or effort that you expend. And that's kind of an interesting phenomenon. They call it the Pareto Principle because a gentleman, an Italian economist named Vilfredo Pareto, found this one day when he was working in his garden. And he noticed that about 80% of his peas came from about 20% of his garden. And he thought, that's interesting. Most of my peas come from just a small portion of my garden. And so he started to look around, being an economist, and he realized that 80% of the land in Italy was owned by only 20% of the people. And so he found himself in kind of a strange mindset. He said, this is really interesting. And so what he did is he started digging into it, and he started to see the same phenomenon happening all the time in all different types of places. And so I have found it to be true in my own world as well, and in my own business. And I'm going to show you some examples right now of how it's probably true in your own life too. So let's take a look here. Now, the 80-20 rule isn't hard and fast in that it's always 80% and 20%. Sometimes it's, 18%, sometimes it's 22%, 25%, but the rule basically says this: a few things that we do make the most difference. That's the bottom line. There's a few things that make the most difference. And if you spend your time and energy on the few things that really do make the most difference, you'll get the very best results possible. Then you can decide if you want to spend any time to learn that last 20%, because you're going to get 80% of the value from 20% of the efforts. Let's look at weight loss, for example, right? If you want to lose weight, there's a lot of things that you can do. I did a little bit of research out there to see what kind of things were online that people were advising people who want to lose weight, right? I saw things like drink water before you eat a meal, take supplements, reduce your sugar consumption, eat fewer calories, eat fewer carbs, eat slowly, chew longer, eat smaller portions, exercise for 30 minutes a day, eat less meat, reduce fat intake. It just goes on and on. But the truth is, the two that make the most difference is eat fewer calories and exercise. Do a little bit more exercise, put a little bit more into your activities, and you'll lose weight. We all know that. Now, is all that other stuff bad? Not at all. All that other stuff is fine. If you want to drink water, more water, that's fine. If you want to drink a glass of water before you eat a meal, nothing wrong with that. If you want to take supplements, fine, knock yourself out. But the bottom line on it is, if you eat less and exercise more, you're going to lose weight. And we know it. Okay. So out of all the things that you could do, two of them will make 80% of the difference. And then you can start doing other things to maybe make even more of a difference in your life. Weight loss, I like that example because it's so obvious, right? 80% of your weight loss is going to come from just cutting back on how much food you eat and doing a little bit of exercise. That's the Pareto Principle. But now the opposite is also true. 20% of the results that you get are going to come from 80% of the stuff that you do out there. So think about that. So in other words, if you just focus your energy on the few things that make the most difference, you can get a lot accomplished in a little amount of time. And what I want to share with you guys about note investing is simply this: it doesn't take a lot of time to build a successful note investing portfolio. It doesn't take a lot of effort, but you should focus your effort and your time on the things that matter. Put your time and energy where things matter. I appreciate that. So before I move on, I just want to take a second here, and I want to give a shout out. I see my friend Curly is here today. Curly, thank you. He says, "I'm here to learn, my brother." I see there's a ring on there. I don't know. Is that a Green Bay ring? Super Bowl ring? Woohoo! That's what it looks like. Right on. Welcome, Curly. Patrick, thank you so much for sharing. You said you have shared this with your friends. Thank you so much. Curly, if you don't mind sharing, anybody else that's out there listening, share this with your friends and family. If you guys want to learn about note investing, you can go over to my website. My website is investbrilliantly.com. And on my website, you can, this is how the homepage looks. Click right there on that button. It says, tell me about my coaching program. I have a coaching program where I'll be happy to teach you guys about notes if you want to learn. Not very expensive at all. As a matter of fact, I should raise my prices, but I'm not, because I just want to see you put a little bit of skin in the game. I don't necessarily need you to make a major commitment. So check it out. Another thing that you can do, if you decide to sign up for that program, in addition to just my online training course, we're now also including our Millionaire Maker coaching as well, which is all of it for $97 a month. So you get a course, a training course with about 50 hours of material in there, video-based training, and every week we add more stuff. And you also get one-on-one coaching and group coaching too, so that you can be successful in this space. All right, well, let's get back to Mr. Pareto. Vilfredo Pareto. This 80-20 rule holds true. The smart thing to do is to identify the 20%. I used to own a Century 21 franchise, and I can tell you for sure that somewhere around 20% of the people that worked for us produced right around 80% of the profits that the company made. I also used to own a mortgage company where we had about 100, at one point we had 103 employees. Most of them were salesmen. And I can tell you for sure, the top 20% did most of the business, literally. And the other 80% just made up the difference. And so we see it in all areas of life. Even in your loving relationships with someone in your life, right? There's a lot of things you can do to show your significant other, spouse, whatever, how much you love them. There are a lot of things you can do, but a couple of things really will make most of the difference. How about this? How about hugging them every single day and just looking them in the eyes and tell them with all your heartfelt warmth how much you love them, right? I mean, that's huge. That's huge. And then how about respecting and honoring them? Two things out of 1,000 things you could do. Those two things, right? My mother used to say, put your wife on a pedestal. And I say, yeah, you say that because you're a woman, right? But I get it now, right? In other words, it doesn't take that much. I always just thought, hey, you know, I'm out here, right? I'm out here working for you, working my rear end off, trying to provide you with all this stuff. It's not even all the stuff that matters, guys. You guys know that by now, I'm sure. What about this? Playing golf. 20% of 80% of your success is going to come from a few small things. You don't have to master every area of golf to get good scores. There's a few things that really matter. I understand I'm not a golfer, but I understand that putting is a big deal. Now, putting is just a small part of the game, but it's a big deal, right? If you're a good putter, I guess you can do pretty well on the golf course. I know Patrick is a golfer, so he could probably testify to that. Think about this. In your closet, out of all the clothes you have, you probably only wear 20% of them. You probably wear the same stuff all the time, right? I know I do. It gets frustrating to me. I'm always looking at other stuff. I'm thinking, why don't I wear that? Well, not today. You know, and I go back and I grab my old favorite stuff, right? And we're all doing the same thing. The same shoes. I think I have about, last time I counted, I think I had like 20 or 22 pairs of shoes. But I'm always wearing the same 2, maybe 3 pairs of shoes. That's about it. You know, and we all are doing that, guys. That 80-20 rule is pervasive in our lives. So if you want to get started as a professional investor, there's a lot of things that you can do. But I want to encourage you to just focus on 2 or 3 or 1. And I'll show you what I think you should focus on as we move through this. But you can read every book that's on note investing. You could attend weekly note investing and real estate investing meetings. You can invest in a training course. You could hire a coach or a mentor. You could watch YouTube videos till your eyeballs bug out. You can look at notes online. You can just buy a note and cross your fingers, right? You can take webinars on note investing, and there's so many other things that you could do if you wanted to become a professional note investor. But here's what I would tell you. You want to just do a couple of things, and you want to do them well. And here's why you want to do them. As a note investor, you can really put your money to work for you so that you no longer have to work for your money. And I'm just going to show you a really quick example because I know this is note investing for newbies. And some of you newbies don't really know what a note deal looks like. And so I have a really short case study that I'm going to share with you right here. And it'll show you the big picture of how notes work. This is a little house in Akron, Ohio. I did not buy this particular note. I wasn't able to get it fast enough. Someone else bought it, but I do want to just show you how this works out. This little house in Akron, Ohio was valued at $60,000. The people owed $48,000 to the bank. They had 10 years left to pay on their mortgage. The bank was collecting $494 per month. That's their mortgage payment. And the bank was willing to sell this mortgage for $39,000. Now, remember, I said the people owe the bank $48,000, but the bank was willing to take $39,000. You may be sitting there asking yourself, why would they do that? And the answer is, I don't know, but they do. Okay. Banks sell mortgage notes at a discount, and we buy mortgage notes at a discount all the time. Okay. It's just done. That's the way the industry works. And it's been working that way since 1938. Just because you and I just heard of it doesn't mean that it's not real. It is real. Okay. So if I had purchased this note, there are only three possible things that could happen. Either the people that own the house would make their mortgage payments and pay me like they're supposed to. We call that pay to term. Or maybe they would pay me for a few years and then sell the house and pay me off early. Or maybe they'll make some payments and then they'll stop paying, lose their jobs, get a divorce, whatever, right? And they stop paying. So one of those three things will happen every single time you buy a note. Either you'll get paid like you're supposed to, you'll get paid off early, or you won't get paid. And so let's look at the three possible outcomes in each of those scenarios. In this particular note, if these people were to pay me like they're supposed to, then that means that they would pay me $494 a month for 10 years. That means they would pay me $59,280. Remember, I only invested $39,000 and I got back $59,000. If you take out a financial calculator and you do the math, you'll realize that works out to be a 9% return on investment, a 9% yield. Now, right now, banks are paying less than 1%. If I were to leave that $39,000 in the bank, they pay me 1% or less. I'm far better off investing it here. Okay. Let's look at outcome number two. Suppose they pay me off early. Let's just say these people live in the house for 5 years. They have a couple more babies and decide they need a bigger house. So they sell the house. Does that happen? You doggone right it happens all the time. People sell their houses all the time. So they sell the house and they decide to pay me off. So after 5 years, they have already paid me 60 payments of $494. That comes to $29,640. Now, they still owe me $26,595 when they pay me off, because the payments that they made is mostly interest. That's how mortgages work. You pay a lot of interest and a little principal. So their balance went down from $48,000 down to $26,595. So they've already paid me $29,640. They still owe me $26,595. The total that I will be paid in 5 years is $56,235 on a $39,000 investment. That works out to be 11% per year. That's 11 times more than what you can make in the bank. 11 times. Another way to look at that is if you put that money in the bank, that $39,000, it would take 11 years to make what I make in 1 year with this note. Think about that. Okay. That's why you don't leave your money sitting in the bank. Okay. But now I know what you're thinking. Suppose these people stop paying the mortgage, Desi. Suppose they don't pay you at all. Well, let's look at that. So let's just say that, they're living in the house, they're making their payments, and then something happens. 5 years from now, something happens. They lose their job, they pass away, they get a divorce, and the husband or wife, whatever, stops making the payments. So in the 5 years when they were making payments, I would have collected $29,640. However, because they stopped making payments, I have a right to take the house. Just like if you stop paying your car payment, they'll come and take your car. Okay, I can take the house. Now, I don't want to take the house, but it's my right. And it's a simple process. It's called foreclosure. Okay, all I do literally is I call a local attorney in Ohio and I say, I want to take the house. And I send the attorney a small check. He calls me back in a few months and says, okay, the house is yours. That's how it goes, guys. That's the process. So now, assume I took the house back. Remember, it was worth $60,000 at the time this note was taken out. This is 5 years later. Who knows what it's worth? But let's say it's still worth 60. We sell it for 60,000. After we take it back, we sell it for 60,000. We paid our attorney, we pay our realtor, we pay some closing costs. Maybe, maybe we have to paint some walls or something. But out of the 60,000, we get 51,000. That's just the number that I use. So we collected 29,640 in payments. We get another 51,000 from the sale, and we make a total of 80,640 bucks in a little more than 5 years. That works out to be a 17% return. Now, those are the three possible outcomes. If you can think of a fourth, let me know. But I'm doing this full time, and I haven't thought of a fourth one. Either they're going to pay me like they're supposed to, they're going to pay me early, or they're not going to pay me. One of those three things is going to happen. And as you can see, none of those are bad for me. As a matter of fact, the very best thing for me is if they didn't pay me. That's when it's the best. And you know why it's structured this way? Because banks designed the program. Banks designed this program. What we're doing as mortgage note investors, we're stepping into the bank's shoes, and we get the same benefits that they do. When a bank forecloses on you, they get all of the equity in your house, don't they? It's theirs now, not yours anymore. So I'm telling you guys, it doesn't hurt to be the bank. There's a reason why banks don't flip houses. There's a reason why banks don't rent properties and become landlords, because the money is in the money business. Banks are in the money business. And as a note investor, you are also in the money business. So you can see it makes sense. And that is why you want to learn how to do this stuff, obviously, right? When I saw this in 2013, I was all in. I knew, having been an investor, having owned real estate, a bunch of it, having invested in the stock market, having invested in gold and other commodities, I knew a good thing when I saw it. And I jumped in with both feet, all in. I didn't have to think about it. I started doing it the wrong way, though. I started trying to read all the books that I could, which is fine. I started attending weekly meetups at all the real estate investment companies, and that's fine too, right? I did not invest in a note training course initially. I did finally after a while. I didn't hire a coach initially. I did after a while. I watched a ton of YouTube videos, wasted a lot of time. I pulled the trigger on my first note. I said on here, just buy a note and pray. I did that. I bought 5 of them, actually, 5 assets, and I prayed, and one of them I actually lost money on. So, it can happen. You need to do better than that. You can take all the webinars and all the other stuff, but you need to have a better plan than that. Here's what I suggest to you guys. Identify the 20% that matter most and put your energy there. And here's what I can tell you, in my opinion, they are. Buy a course. Don't waste your time. Buy a course on investing in notes and take it. Start studying. You can learn at your own pace. We have a course for sale. It's included in our Millionaire Maker program. It's not extra. It's just included. At the we call it our Note Investor University. And in that course, we have about, 50 hours or so of information that you can use. You can learn. It's organized so that you can learn in a systematic way. Just go to investbrilliantly.com and click on the coaching button there at investbrilliantly.com, and you can get yourself signed up for that. Okay. So that's the first thing. Get a coach. Take a course. The second thing is to get a coach or a mentor. And again, at our program, for the same $97 a month, not only do you get a course, you also get coaching, one-on-one coaching and group coaching. Okay, so I recommend it. You can go out and try to do it on your own. You can figure it out. You're smart. But you know why? It's going to take you 2 years of study. It's going to take you all kinds of grief and agony when it's already done for you. I mean, you don't have to do it the hard way. You don't have to reinvent the wheel. $97 a month, and you can get in there, and we will be happy to teach you how to do this stuff. Okay. And as soon as you buy your first note with us, you don't even have to pay $97 a month anymore. So if you buy your first note in the first month, that's it. You only paid $97 once, and now you got a note. Okay. So, but get started. Start learning this stuff, because you need to learn. You need to know this stuff. If you want to start making the kind of money that note investors make, if you want to start building real wealth, I can tell you, once you have a coach or a mentor, it'll shorten your learning curve. You can avoid making stupid mistakes, like buying a house that was formerly a meth lab, which is what I did. Okay. You wouldn't make stupid mistakes like that because you know how to vet these properties and you don't step on landmines. Okay. So that's it. That's how you get started, in my opinion. You can start any other way you want, but if you want to start smart, that's what you want to do. Join our program or a program like ours. There are lots of programs out there. Ours is the best, in my opinion, because I'm very, very committed to your success. Others, I don't know. I can't speak for other people. I know that for me, this is my way of giving back. This is almost like a ministry for me. And it's important to me that you succeed. And I'll be working with you to help you succeed in this space. Okay. So that's just where I'm coming from. But you can do whatever you want to do, right? Whether you sign up for our course or not, I'm already doing very well. Very well. It's not about the 97 bucks. My life is set financially. I'm set. If you want your life to be set, then you need to do something. And I can tell you this, the more people you hang around who are financially well off, the better off you're going to be. The more people you hang around that are broke, the broker you're going to be. I mean, that's just the way life is. You know, I'm 67 years old. I can tell you that's the way life is. You hang out with people that break into houses, you're going to, before long, be breaking into houses. Okay. You hang out with people that go to school, before long, you're going to be going to school. You hang out with people that read their Bibles, before long, you'll be reading your Bible. You hang out with people that are making money in real estate and mortgage notes, before long, you'll be making money in real estate and mortgage notes. You know that. You know that to be true. So when you join our training, you also get to participate in our mastermind groups. We have a session every Saturday morning at 8:30 Pacific. You get to participate in that. And those are real investors on those Zoom meetings. These are not wannabes. These are not people who are just studying. These are real investors. Several of us are millionaires. You can just be on this call. You can be a part of the group, and you should if you want to change your life. Or don't. I mean, it doesn't matter to us. It matters to you. Okay. The other thing I want to tell you too is you can share this information. Once you learn this stuff, what we're teaching you is financial intelligence. You can teach this to your kids and your grandkids. And you should teach it to your kids and grandkids, because there's no point in your family struggling and being broke now that you know this. You know, if you try to share it with them and they don't want to hear it, they're not feeling it, that's on them. But if you don't even share it with them, that's on you. Okay. And so I'm big on it. You know, our company is the ACI Legacy Group because I believe we need to work on leaving a legacy. And most people in middle class don't think about legacy, right? They just don't think about it. The wealthy do. And the legacy the wealthy leave their children is not money. Middle class and poor people think the wealthy leave their children a legacy of money. They might leave them money, but that's not the legacy. What the legacy is financial intelligence. They're teaching their children from little kids on how money works. You need to start doing that too. But first, you need to learn it. I thought I knew how money worked. I had owned mortgage companies and real estate companies, and I'd made a ton of money. I didn't even know how money worked until I got into the money business. See, you don't know what you don't know until you know it. And once you know it, now you got it, and you can change the world. All right, guys, that's all I got today. That is our Note Investing for Newbies show. And I hope you guys will go ahead and get signed up on our website. Just get over to investbrilliantly.com. And when you get over there to investbrilliantly.com, click on that link. Tell me about your coaching program. And you can see all about our coaching program. And once you've done that, then you can just go ahead and you can become one of our students. You'll reach out to me by phone, and I will be happy to welcome you into the fold and to start to teach you what you need to know to change your life. And if you follow what I'm teaching you, depending on what you want to accomplish, I can show you how to become a millionaire in less than 5 years for sure. But that's up to you. Maybe you don't even want to be a millionaire, but you can certainly do it. All right. That's all I got. You guys have a great rest of the week. God bless you. I'm Desi Arnaz, professional investor, and I'll see you next Monday.